Hello, trading is closed on May the 10th, 2017. Yesterday we had a short-term call and a long-term call. The short-term call said that the pattern was basically positive and that higher prices should print unless we gapped down and immediately undercut this low. It was clear before the open that that wasn't going to happen, so we looked for higher prices. The target was this red line, and that printed and there was resistance over it. The long-term call that I'm sticking with is that this high yesterday marked the end of the current rally leg, although not the end of the bull. This was the narrowest range day we've had in a long time. We've had a long consolidation. We haven't really moved very much. This was the narrowest of the days of the whole range, under 7 points. There's a rule that after the day with the narrowest range in a long consolidation like this, that you should expect a day with a very large range. So I'm expecting a pretty big move tomorrow. There are positive and negative aspects of the pattern, so the odds favored gapping outside of the day's range. It's positive that we gapped down, hit a lower low and couldn't hold on to any of it, but it's negative that we rallied all day long, could not close over the middle of the day high, couldn't close over this high, this high, this high, or even the March 1st high, and what's really negative is we couldn't even close over this low. So we have positive and negative patterns. MEJT doesn't have much to offer us. It did say accurately this drop was false and that prices would retrace. Said that drop was false, prices would retrace, but there's nothing new. So which direction? Well, guessing the direction isn't my long suit, but I believe this is a pattern which typically closes near the day's high. When it drops all day like this, it usually leads to a further drop. That didn't happen. This incompatibility would be erased if we were to gap down tomorrow morning and undercut this low, which would be the market's way of saying today's action was a mistake. Here's the count we're using. Let's start with this black B. You've got some pretty good Fibonacci relationships here. If this is ABC for A, and that's ABC for B, you'll see we've retraced 61.8%. You've got nice Fibonacci relationships. It's perfectly plausible that we drop right from the open, which is what I'm hoping. So, with the caveat that a gap in the wrong direction kills the call before the open, I think the odds favor gapping outside the day's range. I would like, and I believe we will see the gap to be under this low, although it isn't a guarantee. And if that happens, we should be in for a very large move to the downside. And if it doesn't happen, it'll be clear before the open, and then we're going to have to reassess the situation as far as tomorrow's trade's concerned. In the event, I expect that high to hold. And that's today's call.